Hey, what's up everybody? This is Jessie with Minimalist Accounting and I have an awesome video for you guys today on the balance sheet. We will begin our lesson by going over the basics of the balance sheet, followed by different balance sheet account types, a generic template for the statement, and lastly, a quick and easy example to wrap it all up. Let's look at the basics. A balance sheet is used to show a company's net worth. It is also sometimes referred to as the statement of financial position. Out of all the 5 basic financial statements, the balance sheet is the only statement which is reported at one point in time. The basic formula used is the accounting equation, which is assets equals liabilities plus equity. Moving on to the different account types reported on the balance sheet. Let's bring in that formula and dig deep. Okay, let's make our different sections and begin with assets. Assets are reported in the order of liquidity with the most liquid item listed first. You can think of liquidity in terms of how quickly you can convert something into cash. Assets can further be classified into current assets and non-current assets. Current assets are those which are expected to be realized in cash or to be consumed during the normal operating cycle or within 1 year of the balance sheet date, whichever is longer. So these would include cash and cash equivalents, short-term investments, receivables, inventories, and prepaids in that order. We have the non-current assets, which are simply defined as assets which are not current. These include long-term investment, property, plant, and equipment, intangibles, and other assets. Moving on to liabilities. Now, these are reported in order of maturity, with those maturing first listed first. Just like assets, liabilities can be classified into current liabilities and non-current liabilities. A liability is current if it is expected to be extinguished through the use of current assets or by the incurrence of other current liabilities. These include accounts payable, accrued liabilities, unearned revenue, income tax payable, notes payable, current portion of a long-term debt, and we have non-current liabilities, which again are just defined as those that are not current liabilities. And these include notes payable, bonds payable, lease liability, pension liability, and deferred taxes, to name a few. Jumping on to equity. Equity is reported in order of permanence. Now these include what's called contributed capital, which includes common stock, preferred stock, additional paid-in capital. Then we have treasury stock. We have retained earnings. And if you don't remember the formula, it's beginning retained earnings plus net income minus dividends to give us our end retained earnings. And we also have accumulated OCI, which is often calculated in the statement of comprehensive income as seen in the last video. Okay, now that we have all that, let me show you a balance sheet template. Now, the title is made up of 3 lines. We have the name of the company, the title balance sheet, and the date. Remember, a balance sheet is reported at a single point in time. So it would read something like December 31st, 20XX. We then go on to show our assets, current and non-current. We show our liabilities, again, current and non-current, stockholders' equity, and we add those up to give us our total liabilities and stockholders' equity. And notice that the total assets, which is the right side of our equation, matches the left side of total liabilities and stockholders' equity. And now, moving to the fun part, which is the example. We are given a partial trial balance and we are asked to create a balance sheet. Let's begin with our top 3 tier title. I'm going to say, I don't know, Psych Company. We have the title balance sheet, and we're gonna say this is for December 31st, 20XX. All right, so now first let's begin with our assets. Let's look at our current assets from the list. Oh, we see cash. Let's note down cash because that is the most liquid. We have a cash of 15. Let's strike that out. Next, we see that we have accounts receivable. We're going to write that down for 20,000. We have prepaid insurance of 3,000. And let's total those down because it looks like those are the only current assets available to us. And that comes up to 38,000. Now let's add in the non-current assets. We see we have equipment for 200, and we also have a long-term investment of $10,000. Adding those up, we have our total assets for $248,000. Let's move on to liabilities. In order of maturity. Okay, so we see we have accounts payable of 11. We have unearned revenue for 7. Got that. We have bonds payable. Now note, it says due next year. That means that this bonds payable is current liability because it is due within 1 year. That gives us our total current liabilities of $28,000. It looks like we don't have any non-current liabilities, so let's just move on to equity. With equity, in order of permanence, we're going to begin with common stock for 50 and retained earnings for 170. Now, why is it 170, you ask? Great question. Let me show you how we calculated the 170. So the formula, like I mentioned, for retained earnings is beginning retained earnings. Our partial trial balance tells us that that is 100 plus net income. So we're going to add 70. And there are no dividends, so our end retained earnings is going to be $170,000. Now let's add up our total liabilities and equity. And would you notice that our right side of the equation matches our left side of the equation? They're in balance, and we did it right. How about a real life example? Let's look at Apple's balance sheet. Beginning with the title, we have the name of the company, we have the title balance sheet, and we have the date of which this snapshot is provided for. We have assets divided into current assets and non-current assets, totaling those up to total assets. And we have our number. Let's move on to liabilities and stockholder equity section. We have current liabilities, we have non-current liabilities, and we have the stockholders equity added to those, giving us our total liabilities and stockholders equity. And look at that. They match. Our assets match the liabilities and shareholders equity total. Look at you. You are a master at reading balance sheets now. Go you. In conclusion, remember that balance sheet reports a company's net worth. They're reported at a point in time. Don't forget the accounting equation. We have assets equals liabilities plus equity. And also remember the classification of the different balance sheet account types. That's all, folks. Thanks for watching. I'll see you in the next video. Till then, happy counting.